Welcome to the conference hall. We're going to start our first panel of discussion with the title Governance and Regulation in an Increasingly Decentralized World. So I'd like to get everyone to take your seats first. Okay, to start the panel discussion, so I'd like to welcome first our moderator, Charu Sethi, CMO and Unique Network Senior Ambassador of Polkadot on stage. Just imagine 1,000 people is applauding right now. You can be seated anywhere you want. Okay, there your face. Your picture's over here. You have to sit in front of your picture. Okay. Okay, our panelists, let's welcome Erika Evasdottir on stage, who's the Centrium Advisory of Service Limited. A round of applause, everyone. Ah, nice. Wang, Secretary General, Asia Pacific Real World Asset Tokenization Platform, Chief Operation Officer of SGTOX. And next, Athena Miao, Chief Commercial Officer. And last panelist, Lim Haoping, Coinhako, Deputy General Counsel. So everyone, let's give a big round of applause to welcome our first panel discussion for the day, Governance and Regulation in an Increasingly Decentralized World. Take it away.
Thank you very much. First of all, thank you everyone for being here. It's a Saturday morning, not an easy call to make to prioritize an event over your usual Saturday break. But thanks again for being here, and thank you to all the panelists.
And actually, since Taylor Swift is in town, we really do thank you for coming.
Oh,
since
yeah.
we understand you have other priorities.
Totally. So with that, I guess it's a big topic. But before that, let's just do a quick round of introductions, and then we'll get into the meat of the topic.
Sure. Hi, my name's Erika Evasdottir. I'm the principal at Centrium Advisory Services. We are a bunch of former lawyers who thought that the law firms maybe had their place, but we thought we could give broader advice that would wrap up a whole bunch of things. And so we started Centrium to help startups, people who are doing funds for the first time or coming out of, their actual fund houses and starting up their own fund, et cetera, to tell them, step-by-step concrete commercial plans for how to do it right. And so that's what we do. We've been around, I've been in blockchain since 2016.
Amazing. Thank you, Erika. Welcome. Wang.
Sure. Hi, my name is Wang Hao. A very, I would say, a quick introduction by myself. I've been doing mostly finance and investment for the last 16 years. Until the last 3 years, I moved into fintech, mostly blockchain, starting as an investment, investing in different funds, venture funds, and later I built one of the biggest mining companies for Bitcoin in Singapore as a global headquarters and expanding operations in the US as well as Kazakhstan. But in the last 2 years, I'm focusing mostly on the real-world assets, what we call the SGTOX. Is one of the regulated exchange to be issuing some of the real-world financial assets. But there's more than that. So we formed the alliance called the Asia Pacific Real-World Assets Organization Platform that's incorporating 17 institutions from finance institutions, banks, brokers, to real estate companies, etc., across the region. So that's actually what I'm focusing in the next, I would say, 2 to 3 years at least. Japan is the number one of my focus, other than Singapore. There's a lot of opportunities. Two things, if anyone here actually have interest in Japan. Number one, the Nikkei actually has hit its record high after 35 years. Number two, we are very close to the record high for the Bitcoins and etc. So Japan is actually a very regulated market for us to connect the Web2 TradFi monies with the Web3. So that's something that I think more than happy to share on that.
Amazing. Thank you, Wang. Japan is indeed exciting. Athena.
Hi, everyone. My name is Athena. I actually come from a more traditional finance background. So I actually started working at a fund house about a few years back. And I'm actually, I would say, in a more special position where I hold 2 full-time permanent jobs. One in the traditional finance industry as a fund advisor, where I help to launch funds, VCCs, SPCs, and family offices. That would be more, based in Singapore. where I represent an RFMC. So the other part of my, I would say, more DeFi job would be representing Big One. And I've actually been in charge of expansion into the Central Asia region, where we have actually successfully managed to obtain a license from the EIFC region in about November last year. So we actually work very closely with the regulators in Kazakhstan to see how we can introduce cryptocurrency in a safe and, I would say, digestible way to the public, who might not be, so, I would say, financially informed. At the same time, I'm actually working on a few tokenization projects in Kazakhstan itself. So I hope to, give a bit of my views here and there and kind of everywhere.
Amazing. Thank you, Athena. Hao Peng.
Hi, good morning, everyone. I'm Hao Peng from Coinhako. We are one of the first crypto trading platforms to be licensed in Singapore. We provide a broad range of services from crypto spot services, fiat on-off ramps, to more bespoke OTC products and derivative services as well, primarily serving the Singapore market and the Asia market. And of course, we provide our services to retail and institutional clients, whether you're a corporate, a fund, high net worth individual. That's what we do. We pride ourselves on being a regulated exchange, and we think that's where most of the centralized crypto entities will move towards to in the future.
Amazing. Thank you so much. And I am Charu. I head up marketing for Unique Network, an NFT infrastructure company. I'm also deeply involved in the product space from NFT interoperability perspective. I am also a senior ambassador for Polkadot, and that's where deeply entrenched in the discussions around open governance, decentralization, and all things community. So I think it's going to be an interesting conversation. I've been with Polkadot ecosystem for over 3 years now, and Web3 has a bold mission to bring value to billions of users while striving for decentralization, digital sovereignty, privacy for data rights, and doing fair for the community and the investors. However, blockchains have been classified as illegal by many, not illegal, but illegal, right? Which sort of encompasses all acts that are beyond the intelligibility of law, or they do not allow for a clear classification into legal or illegal binary, and that's where we're all here. So, Hao Peng, starting from you, it is very widely acknowledged the role of how important it is for centralized institutions, custodians for wallets to play a role in this. And to an extent that the decisions that centralized institutions like yourself or Coinhako make, they are automatically followed by the decentralized communities, even in making decisions like which hard fork to choose, because we follow what regulators have to say. So from that perspective, how do you view this sort of industry, this decentralized side of it and the centralized side of it? Where do you see the communities going and your perspectives?
Yeah, so I mean, thanks for the question. I'll give a more pertinent example that everyone can relate to, right? USDC and USDT, these are the largest stable coins in the crypto ecosystem right now. And if there were to be a hard fork one day, where the USDT and USDC issuers decide which fork to support and where that you can claim your dollars, that's going to have a huge impact on which fork eventually gains the major social consensus, right? So I think to some extent, there will be some entities and centralized entities in the space that have a bit more influence over how these forks eventually be the one that prevails. But right now, I think we are still relatively early stages in the crypto ecosystem. The total market capitalization is still not that big, so we still see some centralizing forces like that. But eventually, we are seeing a lot more stablecoin issuers come out. There are new stablecoin frameworks in Singapore, in Hong Kong, in the UK, and of course in the EU under MiCA, under draft consultations right now. And as more and more regulated private stablecoin issuers come out, we'll see decentralization of more of these type of tokens, and in the future, perhaps there will also be more diverse opportunities for us to decide which is the fork that we want the social, most people want to choose as the consensus in terms where there comes to be a fork. Yeah.
Amazing. Thank you for those perspectives. Very, very insightful. Erika, and you have deep expertise, and you've observed the space for many years as a lawyer, as an advisor. How have you seen the industry change, and from a regulatory perspective and from a compliance perspective?
Well, when we first started back in the day, which was only a few years ago, it's amazing how time passes. But when we first started, of course, none of the regulation actually applied to us being any form of cryptocurrency, blockchain, etc. We were, as you say, illegal because we were outside any of the established categories that the regulators would look at you or the lawyers would look at you. That's why I started Centrium, because the lawyers were useless. Sorry, lawyers, love lawyers, am a lawyer. But they were useless, it wasn't their fault, it's just that they didn't know how to approach something that didn't exist in the law, right? They just couldn't conceive of it. The category was not there. And so at the beginning, we had two types of clients. You can imagine where the first type of clients are currently, namely jail, which is the ones who wanted to do everything under the table, and since the law and regulations don't apply to us, we're going to do whatever we want, right? And then there are the other clients who are still extant and doing okay, but they didn't become incredibly rich and then go to jail like the other guys. They kind of were boring and step by step, but they're still around and they're still making money. So I think over time they're going to have a better life, meaning that we would help them, not me, but everybody who was trying to help, but would help them take a step back and say, all right, the regulations don't apply to you right now, but what is the principle behind the regulations? What are the regulators worried about? Is there anything that we can do where we can address those concerns, maybe not in the way the regulators tell us, step 1, step 2, step 3, because we can't do that, because our industry doesn't work like that. But is there any other steps that we can do or take to achieve the same result, right? And that sort of principle-based concept was very important, because when those people finally got hit, when the regulators finally went at Kraken, when the regulators finally went even at Binance, they had attempts. You could see that they had made attempts to do the right thing. Maybe they failed, maybe they didn't do it so well, but those guys aren't in jail like the other clients that are in jail for hundreds, hopefully, of years. So that sort of approach, the thinking of like, all right, I've just got to treat my clients well. And how do the regulators, they want me to treat the clients well and fairly. All right, how can I do that in a whole new world? And so that approach is really the right approach.
Makes sense. And it almost makes sense as common sense does, but yeah. All right.
Surprised.
Interesting. So Wang, you've seen, how do you see the digital economy shape with regards to self-regulation and the landscape that you're seeing now?
Okay, I probably want to put that question into 3 stages, and then we can see the perspective how actually we understand the digital economy and the regulation side by side. Because let's say the regulation part is very simple. I say regulation is usually a kind of like a risk management authority. So they don't really want, actually they hurt a lot of the mass markets, either from a consumer perspective or from a business or social security perspective. They want to make sure this is actually bottom line. So that's actually the #1 priority. But digital economy, if we're talking about just like broadly, it can involve anything on internet or digitally. It doesn't have to be blockchain 100%. This will drive by itself. It's usually, I think, comes out of the crisis rather than just a self-proactive driven. I'll give you an example. So the last project I actually found is called the Meta Bank. We essentially targeting the emerging countries. So looking at Laos, Cambodia, and all these emerging countries, they're somehow on the edge of actually a economic collapse in terms of inflations, in terms of the currency and stability, etc. So what we can do, there are a lot of things they can do, but the thing is, they firstly don't have the technology, number one. That's easy, we can provide. Secondly, they need the will, actually, the courage to do it. That's something takes from basically not just from a minister level, but actually takes as high as a prime minister or the president's level actually to adopt such actually strong will 5-year plan. That's what we have actually been implementing. But then when you actually implement, you see there's more you can do. From assets, I mean, just look at globally, where are the assets coming from? People say it's in the US, of course, that's been financially recognized. Does not mean that's the only where you can get assets. There are a lot of assets, let's say, I give you an example, the gold mines, the agricultures, and the legacies in those museums and UNESCO sites. There are a lot of assets. And do we have a value for it? Do we have a place where you can do press discovery? No. And why we can't? Or if there's a value, attribute to it, whether as a consumer, as a viewer, or anything, right? So that's something that we're thinking about broadly as a digital economy. Narrowly, in the next probably 3 to 4 years, that's a little bit broad for us to attach, but the next 2 to 4 years, I think it's more about making sure the financial assets plus a little bit non-financial assets, but valuable to a lot of people. We talk about energy, we're talking about food, to be, I think, incorporated into digital. Blockchain is just one type of solutions. It's not everything.
That's just an enabler, absolutely. And Athena, you have an interesting journey into blockchain, and that also gives you a very diverse perspective into the regulatory environment in Kazakhstan or compared to the region. So tell us a little bit about your journey and your observations in sort of the regulatory differential or the arbitrage here.
So I would say that coming from working with the MAS in terms of traditional fund management, a lot of things I would say that are actually not spelled out from the general public. And for example, sometimes when you apply for 13O, 13U family office, or when family office or VCCs, certain things have to be very exact. And if it's not, MES will be like, okay, this is not in, please redo up the entire document again. It has to be by the letter and very precise. At the same time, if your application does not go through, it's something a bit similar to like a PR application. It does not, they do not really tell you like what's the problem with it, and you kind of like left, you know, thinking, oh, is it that, or is it this, or did I not mention that, or is it a problem with my LP or my directors, or, you know, their nationalities or things like that. So it's not very clear sometimes, you know, sometimes on what are the expectations it should be, you know, even when I work at my fund management firm. So I would say that about 2 years back, the portfolio manager of my fund management firm, that actually is the portfolio manager of a cryptocurrency fund. All right, it's that cryptocurrency fund. He actually happens also to be the CEO of my cryptocurrency exchange. And suddenly one day he told me that, oh, Athena, we're actually looking into a license in Kazakhstan. And I was like, okay. My husband happened to work with the regulators there in AIFC, and actually the entire organization itself. So the connections were more or less kind of already there. So that's where my whole journey started. When I first landed in Kazakhstan, it was the first time I was in the country, and it was the first time I was actually speaking to regulators from, I would say, outside of Singapore. And that's when I realized that actually there are people that I can put a face to the name with. There are people that actually I can, after I met them at office, I can ask them like, hey, you know, will you be free for lunch? Will you be free for dinner? We would have business lunches and things like that. And when we submit documentations and everything, actually very detailed. They will actually, it's actually very similar to how I work with the lawyers here when we do up memorandums, where they will actually would highlight everything and ask like questions like, please edit this part, you know, this is, what are you trying to say here, or please elaborate. So they were very clear on exactly which areas we need to edit. And so the process, I would say it felt a lot more like a conversation ongoing, where it's a bit of back and forth, yes, but every single time when documents bounce through, we know exactly where were the problems in certain places and what were the expectations. So it is not just at the part where, actually you were getting the license. Even after getting the license, what I usually do, I would say is maybe because coming from my more traditional finance background, before I even start on a project, before I even start working with my partners, business partners in Kazakhstan, the first thing I'll be doing is running to my regulators who are Athena Financial Services Authority, and I'll be like, okay, I'm doing this. This is my business proposal. This is what I'm expecting to do. Is this okay? What are the things I need to watch out in terms of AML? What are the things you need me to do on my platform to ensure that this is regulated? Are there regulations already, or would you want it to be a pilot where we can test things out together? So, and AFSA is always very willing to, work things out with me. For example, the licenses I have, right now are 2 licenses, one for custody and one for a digital asset trading facility. And one of the requirements is that, clients' total assets for professional and retail cannot exceed a certain amount. So on the tokenization project that actually I'm doing for real estate, I think the maximum amount is about maybe $2 to $3 million US. And I said, look, this is definitely not going to be enough. Is there any way that maybe for this project you can give me a little bit of leeway? And AFSA's reply, like immediately to me, was that as long as you can provide the proper justifications and write a detailed explanation of what you're planning and everything, definitely is very negotiable, and we are willing to work with you along the way. So it feels like they are more of my partners than my regulators in certain aspects when we venture into different things together. And whenever I'm having problems with sometimes the banks, we have like bi-weekly check-ins where they're asking me, okay, Athena, how are things going on? Do you need help and support? Speaking to regulators or business partners, if let's say the banks have issues, just let us know, and then we will get a conversation going on for you.
Great, thanks. And that's the kind of openness you need when you're in a high-growth environment, a high-growth economy. And Haopin, I've seen that, Coinhako is great, and that's my sort of go-to app. And it is, over the last couple of years, I've seen high growth in terms of the investment opportunities available through the app, and it's both all sorts of tokens. And how do you assess then, in terms of your listing criteria, or what do you assess looking at more tokens, security offerings, and decentralized projects before listing? What do you look at?
So when we look at listing a token, there are lots of factors that go into it, and we look at it holistically, whether it makes sense for us to be listing a new token on a platform. There are legal considerations involved, technical considerations involved, the security of the tokens and other potential risks in terms of hacks. Has it been audited? And of course, most importantly, the commercials of the token. What are are there any benefits for the token holders, and would our users want to buy and hold these tokens? So just to add a bit more, at least on the legal side of things, the main concern is whether we have the licenses to list the type of tokens that our users demand. And obviously, the most important one is whether it looks like a security. Oftentimes, if a token starts to look like a security, many crypto-native platforms that are not regulated as security exchanges or security dealers would not be able to provide such products to their clients. And the type of red flags that we usually see is if you start to distribute a profit from your protocol, or if you start to promise things like an investment return or other type of similar arrangements, it looks more like a security, and many crypto platforms will find it difficult to list such tokens. Even if your project is centralized or more decentralized, as long as your token looks like a security, it will be difficult to list regardless.
Amazing. Yeah, that makes sense. And often projects don't have the foresight that an exchange like Coinhako has, or they don't have the clarity to what's right, what's not. And that's where someone like you come in, Erika. You have very clear
ideas what they should be doing.
Very clear ideas.
So one of the things that I always tell my new projects is eventually you're going to want to list, or eventually you're going to want to raise money from investors, okay? So everything you do from day one should have the concept of one day I'm going to be in front of an exchange, one day I'm going to be in front of an investor, or God forbid, one day I'm going to be in front of a regulator, and they're going to be doing due diligence on me, and they're going to look at every tweet I have ever tweeted, every social media post, every single white paper I've ever put out of there, and you know, the internet never forgets. And so what they don't realize, and again, a lot of these people are really, really smart, but they aren't, from a lawyer's perspective, they're not very disciplined. So they just want their product to do well, so they try things out, right? They use this metaphor, or they start using this vocabulary. And what they don't understand is that words matter. Remember, you know, they say sticks and stones may break your bones, but that's not true. Words matter. Words matter more than sticks and stones, okay? Because if you characterize your token, which is just an NFT to enter a game, and it's not even a gambling game. Don't worry about gambling. You've thought about all of that, but yet you characterize that NFT as being staked in order to play the game. You've just killed yourself. A perfectly good game, a perfectly good NFT, and you just screwed yourself in your own behind because you used the word stake. And they're like, yeah, but everybody knows what that means. And I'm like, yeah, the regulators, they, maybe they're not as smart as you, or they very much believe words matter. And so the discipline of thinking beforehand, how am I going to talk about my product, my token, my NFT, my game, whatever it is, my protocol, whatever it may be, matters a lot. And so I have gotten into serious fights, just one last week, where they're like, yes, but the people who are using your game, they finally figured out they have to change. So they have told all of the people in the Philippines that their game used to have all this staking and all these ways where you could make money out of the game, and they're changing all of that because now they're scared, and they're running scared, and they should be running scared. And they're doing it so that they're talking about community building and building out the utility and all that sort of good stuff, right? But they still don't want to give up the word staking because they're worried that their user base will run away. And I'm like, your user base is not that stupid. They really aren't. And if there's still a way for them to make money off this game, they'll figure it out. Don't worry about it. Just stop thinking like that. But they really have trouble dropping those finance terms or those security, income, you know, earning-based terms. It's my biggest problem.
It's a tough one. It's not easy, right? And especially when they're so focused on the core technology, they don't see a reason to be scared and being apprehensive, right? And but obviously what you're saying is there is some sort of level of hygiene that needs to be followed from a structural, staffing, data, IP perspective, just basic hygiene till you get to a point where you are assessed. Right, so that's interesting. And you mentioned staking. Hao-Pen, we had a little conversation about staking earlier when on the phone. And you have some very interesting perspectives around staking and what it means in terms of technical decisions. So would love to hear your perspectives there.
Yeah, so I think staking is an interesting feature that needs to be considered quite carefully because the idea of staking really is not that clearly defined. But in general, we understand staking to be something where you lock up your tokens and you get some kind of return on it. But how you get the returns and what is the nature of those returns matter. If you are staking your assets as part of a proof of stake blockchain network, and then you are getting rewards for validating the network, as compared to staking in, let's say, a decentralized exchange and earning a revenue from that exchange, as compared to, staking an NFT to, let's say, as Erika mentioned, gain access to a game or network. It's a very different type of activity. Some of these are at a higher risk of being seen as an investment product or a security. And so I think the most important question is, does your product consider or require a staking sort of feature that looks more like an investment product? Because if you do, and if that is your competitive advantage, and what you want to give to your users, then you should seriously consider whether you should be regulated under, let's say, a securities framework. And if there's not a feature that you really need for your product, then why go through all of that legal risk, right? Yeah.
Totally. That makes a lot of sense. And coming in from the Polkadot ecosystem, they had a very hard stand on how they want to communicate about Polkadot, about listing, about the token, and there was zero marketing done. There was like no AMAs, no Twitter, nothing on the listing or on the token distribution. And then they instead followed a very technical approach, focused on the blockchain, focused on the technology, removal of pseudo, enabling balance transfers, the usual path to decentralization, and just talked about the tech and the product, not about the token. And that's something that works well. Is it worth it or not is a thing to be determined. But I think it is important to stay focused on the product and tech to be safe. And Wang, you've, in terms of bringing the narrative to, or shifting the narrative to tokenized assets, right? How do you see the regulatory framework for those being different from the blockchains or the tokens on blockchains? Where do you see the difference and where do you see the opportunities?
Okay, I think the short answer is most of the tokenized assets, if we're talking to, are financial related assets that probably falls into the security laws around most of the world we're talking about. That's in the case for Singapore, Hong Kong, Japan, Europe. And they're being essentially incorporating, of course, including Switzerland as well, to essentially regulate the tokenized assets if there's security, same as the security itself. So that's actually very simple. But if you look at other utility tokens or any tokens that's actually virtually or digitally actually native in the blockchain itself, for example, the Bitcoins, right, Ethereum, all these things actually broadly, I think, characterized as digital currencies. And they don't necessarily fall into the security laws in most countries. What it makes a little bit complicated because most of the trading pairs, or at least on a transactional basis, people actually mixed up because that's actually denominated in the stable coins or in the BTCs or Ethereums to trade all these kind of security tokens. Essentially, that falls into the security law. This is a digital currency law. I mean, that makes a lot of complexities for the players in this space to hire a lot of experts. Even some experts actually maybe not as experienced and professional as Erika, gave some kind of, like I would say, non-strategic short-term solutions. That's actually very, I have to say, short-term is good, but the long-term actually that results in a lot of overrunning costs, etc. The business cannot be actually run in full scale. But broadly, I think we are coming to more convergence, and especially in countries, for example, in Japan, I see that. In Hong Kong, it's definitely under one authority. US is probably taking a little bit longer time. Europe has actually done that. If you look at the comprehensive law passed last year, that's, I think, really giving a lot of financial institutions to talk to one guy instead of 7 guys in the US to find an answer, right?
Amazing, thank you. And obviously there's a huge cost associated with compliance. In Athena, you've seen that comparing Kazakhstan and here. So how do you assess the trade-offs? So what do you have to say about the trade-offs in terms of cost of compliance and growth?
I think first of all, when you come into a new market and with new regulations, you've got to manage your expectations a bit and be very clear on what are the things that are going to be profitable or what are the things that are not going to be profitable. At the same time, trying to be profitable within whatever is, allowed via regulation. So in my experience, in Kazakhstan at least, I am very clear on the fact that the platform itself, through